Is now the perfect time to buy Dogecoin? Yes. Today I'm going to show you how to read the markets like a pro, the proper psychology which applies to all markets, all cryptocurrencies, but we're going to use Dogecoin as the example. If you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading crypto for around 4 years now, but trading forex markets, currency markets for 15. Featured in the best-selling book, High Probability Trading Strategies, back in 2008. So what we're going to cover today is we're going to use Dogecoin as the example, but it applies to Bitcoin, Ethereum, Polkadot, younger projects like BSE Pad or AdaPad, and these new projects launching. You know, you got the Valus blockchain, you got Solana, which has exploded recently, Cardano, every project that you can think of. Elliot wave and Fibonacci applies to. Around 50 to 70% of the time, the patterns are really clear. But what I want to give you today is a narrative that allows you to read the markets. See what's happening when you put the noise aside. Forget that is Dogecoin, forget that is Bitcoin. What is the buying and selling behavior, which allows us to see what's likely to happen next? That's going to be the focus of today. So strap yourselves in. If you can grab a notepad, do, because this one's going to be more like an education masterclass, because I want you to have this knowledge, because I know you have a crypto portfolio and you want to see what's likely to occur next. So let's dive in. First of all, I teach a lot of crypto. I've got a lot of classes, got a lot of courses. I've got a free Elliot and Fibonacci masterclass, which is in the link below. But what I want to give you today is part of that masterclass. So the narrative is this. What was figured out back in the mid 1800s and the late 1900s is markets tend to unfold in identifiable patterns. And Ralph Nelson Elliot, again, in the mid 1800s, late 1800s, mid 1900s, figured this out. He said markets tend to follow this structure. 1, 2, 3, 4, 5 wave count. I'm going to pull up my laser over here, because this I'm going to then show you how it's just applied textbook to Dogecoin. And even the videos that we did back in May were just textbook, but it looks like magic when you don't know the method behind the madness. So I want you to know the method. So 1, 2, 3, 4, 5. That's my narrative. I'm seeing, does a particular cryptocurrency follow this structure? And at what stage of this is the market at? And is it in an impulsive part of the market or a corrective? A, B, C is like a typical correction that you should always anticipate. There are different types of corrections, but this is the most common. So now I want to jump into a clean Dogecoin chart, right? Clean Dogecoin chart. So let's just jump into a live chart. Here's today's Dogecoin chart, right? This is the price action as of today. I'm going to show you a couple of things today, because today is more of a masterclass. So we're using Dogecoin as the example, but if you're not trained, this just looks like what the heck's going on? What's driving the price? But with Elliot wave and Fibonacci, we can actually project this in advance. So what we did in, this was May 6th, I did 2 videos, May 6th and then another one on May 6th. And the reason I did a second video on the same day was I did this video saying, look, Dogecoin is likely to be hitting a high and we should anticipate a big correction. And then that same day, I had a friend of mine, good friend of mine, phone me who was looking to buy more Dogecoin. And he had already a lot of high exposure to Dogecoin. And I'm like, dude, now's not the right time. Now you should be locking in some profits. And what I said in the video, I think I said it later on in the video, and it was really, let me just play a bit of the video. Let's just listen to me for a second. It's down until the 23rd of June. So what's today? 6th of May. So that's like 6 weeks. Is that right? 6 weeks. So what would that look like? Well, if I just draw it out for you. See, we even said with the time retracement, they said, look, 6 weeks from May 6th, what's that, June, July, that we should see this big correction. And then as I draw it out, it's come down. Oh, another great buying opportunity. I'm like, no, this is the trap. It's the trap. And there's this 5th wave blow off. This is panic. This is typical of panic buying. You know, I've missed it down here, I missed it down here, I've missed it down here. So what I'm saying here is, look, this is panic buying. This is the 5th wave. You know, when we draw it onto this is this part here, or we can say this part here. And in crypto, I call it crypto land, or, you know, crypto land, where there's a lot of FOMO, and when fifth waves are often panic buying and it overextends. And what I saw with Dogecoin was this overextension, and it's a 5-wave structure, 1, 2, 3, 4, 5. We're going to go into that because I want you to really understand this, how powerful it is, because people don't understand the power of this and how infant, as in how young crypto markets are, and they apply very, very well to the psychology of the markets. So now I say, I'm not going to miss it again. I go, no, you've already missed it. Live with it. Just wait for the next train. So typically, I'm talking about a train has left the station, and I said, look, typical correction should be an A, B, C correction into this range. So what I'm going to do today, I want to show you this. So what I'm going to do is got a couple of things, because we're going to really focus in the end. We should be in the timestamps as well. If you want to jump straight to the end, feel free to do so. Actually, I've got these new things over here. We're going to focus on here eventually. That's what I'm going to focus on, is now the right time to buy Dogecoin and why. But I just want to kind of remind you on how powerful this information is, because what we said recently, is that the market should be moving down. This was on the 23rd of August. And look, the market's done this move, just textbook down, and it was exactly like that. So you can read the markets like a book. So let's do 2 things today. First, we're going to do a recap. I'm going to do it like this today. I'm going to write some notes. The notes are recap. All right, power of Fib and plus Elliot. These are Elliot waves. That's going to be for wave 5. And then we're going to do current wave 2. I'm just going to write wave 2. Right, these are the main 2 things I want to cover with you today. Right, recap, power of Fib, and Elliot waves, wave 5. So what do I mean by this? So what I'm going to quickly do here, I've done this before in the past, but sometimes, because I know you're busy, it can get missed. I'm just going to take the data back to here, right? And what I'm always looking for is a 5-wave structure. Again, based on the premise of this, right? This is textbook Elliott wave theory, but 50 to 70% of the time, especially in crypto, you'll see these patterns unfold really, really clear. So I'm just going to go forward a couple of days when this high gets taken out. And when I see this, what you should be seeing yourself is this pattern here. 1, 2, 3, 4, 5, right? Again, just going to loop back. Look at this. That's what I'm looking at. That's why I did this video and this video with such confidence and certainty. Why? Because I saw this pattern, right? This pattern is identifiable, it's clear, it's objective. It's still an opinion of the market, but we're working with probabilities and not certainty. And then what I teach in my masterclass, and I have some courses as well after the masterclass, and I've made them very, very cheap. So you can really, really start learning this stuff, because I only do around 7 videos a week. And I know that's not enough to cover all the coins that you guys request. So I'd love for you to be able to do this yourself. So I'm just going to give you the key metrics. The key metric for a wave 5, keeping it nice and simple, are these 2 metrics. I measure this wave. Siobhan, thank you for your suggestion, by the way, of putting all these in this favorite bar over here. It makes my life easier. I'm just getting used to using it. My default is to go back over there. So over here, we're going to measure that 100%, project it from here. That's what that red line projects. And this is a typical wave 5 maximum. There are other numbers, other ratios. I cover it in the masterclass. But what happens is when I see this is kind of pretty much the price action that we saw on these videos in this zone. When I saw these price zones, this red line, I'm like, look, now's not the time to buy. Now I'm expecting a correction. Why? Because after a 5-wave structure like this, if we look at this, what do we expect? We expect this correction, this ABC style correction. But there's 2 other things that I did in the video, and I probably didn't emphasize them enough, and I want to emphasize them now, because it's going to really pay dividends to know this stuff in the long term. And then we'll keep our notes over here as well. All right, so let's just move the data forward slightly. Let's just see how it unfolds. Well, so we've got this big move down to the downside, so we can be confident that there's a wave 5. So now we want to read the markets. Like, do you get what's likely to happen next? And this is what we were projecting in advance. These are leading indicators, leading indicators. So the first thing is Fibonacci retracement. So we're looking at this. And what we're going to do is we're going to measure the beginning to the end of this move. And the most common is between 50 and 78.6% retracement. Yeah, so that just gives us a price target. But then we can do the same for time. This is a game changer. I don't see anybody doing this, not in crypto anyway, where we can measure how long did it take for this 5-wave structure to unfold. And the typical minimum correction is 50% of the time taken. So what the heck does that mean? So it basically means we're going to measure this time, how long it took for this structure to unfold, this structure here, how long did it take? That's what this represents here. And then we're just going to take half of it, I'm going to say it here approximately, and move it forward from here. And we're going to take the full length of it and also project it forward from here. And what we're going to get when I squeeze this in is these two lines, this blue line and the red line. So now we've got this beautiful, let me just get rid of this here. This is from old data. Price and time zone. So what this tells me, and I go by this, right? I forget the noise. I forget the news announcements. It doesn't matter if Elon Musk is or isn't tweeting about Dogecoin, or when it applies to Bitcoin, Polkadot, you name it. We can ignore the noise. I don't even watch the news. I don't base my judgment on the fundamentals. It's the short term, less than a year, less than 6 months. Technicals really measure the psychology and the buying behavior. So I'm just looking at, right, I'm not looking for the correction to complete before the 26th of June. And the maximum, typical maximum, I'm just going to change this back into a dash line. The typical maximum will be the 15th of August. This is powerful. Why? I'm not even putting on the momentum indicators at the moment. All I'm doing is looking at price and pattern. So what we're going to now do is let the price unfold. And what you can start doing with all your crypto is saying, look, I'm going to wait for this to correct, whatever pattern unfolds, but I'm going to wait for the minimum of this time to be exceeded and the price of 50% to be exceeded, right? That's what we're going to say here. So now we just let it unfold. So let's just let the price unfold. Now at this stage here, like even when I saw this pattern here, to me, this looks like a clear A, B, C pattern in the price zone, but it hasn't reached the minimum time, right? So I go, okay, the correction's probably not over because we're not in the game of certainty, we're in the game of probability. And most corrections get to 50% of the time of the previous swing, the previous 5-way sequence. So now we're just gonna wait. We go, okay, we can kind of be a bit more patient, which is tough, by the way, especially when it's this clear, because that was a textbook ABC in terms of price and pattern, but time, it didn't hit time. So then we can just be patient. See, okay, the correction is not probably complete. And then it did make a new low. And then it reached the 50% time zone. So now the next low is probably going to be the final completion of the low. So let me just move this over here now. Hopefully this is making sense to you, because now we're reading the markets in advance. Because then we're reaching this zone now. And this is where we're going to get into the main part of today's analysis, is the wave 2. Is what we said in our last video, is has Dogecoin reversal been confirmed, and this movement to the upside had occurred, but we've also hit this time and price zone, which I just showed you. This time and price zone, which we're calling, there's a wave 1. Where'd that go? I don't know why it's showing. Oh, there you go. I hope if I press 1. There you go. 1. And then we're calling this a wave 2. This is a nice macro, so very, macro picture of what's happening here. And now we can anticipate a wave 3. What the heck's a wave 3? Well, the wave 3 tends to exceed the previous wave 1. So this is now the part of the market. So now I'm seeing us at this stage of Dogecoin, and the likelihood is we might go on to a wave 3 of a wave 3, which tends to be incredibly bullish. But the lesson goes way beyond Dogecoin. It goes for Bitcoin, Ethereum, all of cryptocurrency, all markets, all time frames. So now what we did in the last video is said, look, we've got this initial 1, 2, 3, 4, 5 sequence. We should expect a correction and then a continuation of the trend. So now we're reading it like a book, right? Because now I'm going to just take it to today's data. So in the last video, what I said was, I think it was around here. I'm going to zoom in. So we've done this part now. We've done this part. We've done the recap. Now we're just going to focus on wave 2. Wave 2. Well, it's technically it's wave 2 of wave 3. That makes more sense in a second. I'll elaborate on that in a second. So let's just now zoom in to this part of the market, this part here. Let's just keep our notes here. Right, we can do other information here, but look, we've got enough information that says with confidence this is likely. Again, I'm still getting used to using this here. This is likely to be the new low over here, and it shouldn't get exceeded. It shouldn't go below that point. It may do, but it shouldn't. We can now clean this up because this is now, we've got the value out of this information, and now we're looking at the next part of the market. But what we said very clearly in the last video, you can go back and watch this video, it was on the 23rd of August, is a nice initial move up, trend reversal. And one of the main reasons I was quite confident it's a trend reversal is because the size of this move is bigger than any other move to the upside. So we can go, we're quite confident that the trend is reversed. But the safest time to buy is the first pullback. So now let's just mark this out. You know, Elliot wave terms, it looks like a nice wave 1, a wave 2, wave 3, a wave 4, a wave 5. Let's just change that to a micro. And now we're going to get into the meat of today. The meat of today, which is this part of the correction, or this part of the correction, or this part here, this correction. These are all pullbacks. So what we said in the last video is we should anticipate a bearish reversal in the momentum and the price to come down, right? And then what we're looking for is a wave 2. Wave 2s are one of the best times and the safest times to buy. It's not guaranteed, it's just low risk. So the market has now come down to this point here. I think this is the first leg down, and we've got a bit more of a sideways movement, bump, bump, bump. I want to show you a few things here before going to today's data. So once we've got this 5-wave structure, this initial move down, I'm doing this lesson to you like this today because there's a lot of cryptocurrencies and I know you're looking at a lot. But if you take my free masterclass, which I teach how to do this, hopefully you're going to start to be able to do this for yourself and think of the long term. Not only this particular bull run, but also the next one and the next one and the next one. Crypto's here to stay. So you're going to be able to do this, you know, for the long term. That's what we want. So what we're looking for now is a correction in 3 legs, A, B, and a C. This is what I always look for, always look for. But what we can do, I'm going to zoom in a bit more now. We'll pull this over here. Is what we can do is we can now project with very high probability on how this is going to play out. How this is going to play out. It fascinates me how frequently it just plays out like this. So what we're going to do now is what we're looking for is this beautiful A, this ABC of a B, and then a wave C. That's what I'm looking for. Let me just draw these waves like this so you can see it. Right, so now let's just actually focus here first. Let's just focus around here to go, can we project with high probability where this high is likely to be? Now this is going to be backdated data because we've now gone beyond this point, but we're going to be down here in a second, and then we're going to be live, and then we're going to be projecting forward. We don't have the data beyond this point because it's today's date. Today's date is, it's literally here. Today's date is going to be around here. All right, so let's just see what is the typical wave B. Well, wave B First of all, price, we're going to do the same thing, but reversed. We're going to do a Fibonacci retracement, this high to this low. Typical wave Bs go between 50% and 78.6%. I'm just going to clean this up now. I'm also going to just remove this line for now. Remove this as well. Let's get really, really focused. Also, there's something called a Fibonacci extension. This is one of the most powerful tools that I've found, where a wave A, so this here, without getting too complicated, is a wave A, B, C over B. A wave B typically unfolds into 3 waves. A, B, C, just like that. And a wave B is more often than not, wave C is more often than not equal to wave A or thereabouts. So what we can do is we can actually measure wave A and project it forward. And there's two numbers. The 2 key numbers are 100% to 160% or 62%. These are the 2 key numbers. So we can kind of conclude it's unlikely that the wave B is going to go to the 78.6. So we've got these 2 price targets. Then there's something called an external retracement. Again, I cover this in a bit more detail in the masterclass, and it's slower. And then at the end of the masterclass, I actually have courses which I'm running at a discount at the moment, massive discount at the moment, because I know what's likely to happen in crypto over the next few months, let alone a few weeks. This is the external retracement. So now we have these 2 real clean price zones, right? We have this zone and we have this zone. And what I would often then do next is I want to look at time. Okay, I don't cover time in my masterclass because it's a bit more advanced. I might do a separate time course because not many people cover time. But the typical correction takes 50 to 100%, right? Look at that, right in this zone. So actually we can move these, if I can, if it lets me. No, it's not letting me. Sometimes it's a bit difficult to click. If I can get it, there we go. Now we've got this time zone here and here. And then what I will do next is I'll look for a momentum indicator, right? I'll normally go for a faster one, meaning the settings would be like this. I would normally check it between 2 of them. I will do it like this. I'll go, which one is catching the highs and the lows better? And they have pros and cons, and I would probably peg, either would do, but this one catches it faster, even though it catches the intermediate swings. So I'm going to go for the 8. So now what I would say, I would often look at the weekly as well, the time frame above. But what I would look for here is I would say when this blue line goes below the red, which it hasn't done yet, we can have a confirmation. But what we've got here is we've got pattern, which is ABC. We've got price, which are these cluster zones, Fibonacci price. We've got time, so we're in this broad time. We can also do a few pieces of time, but this is the basic time. And then we've got momentum. Momentum is oversold. So what you could do here, if you wanted to go short, if you're doing it on futures contract, is look for a swing low. On a line chart is not clear. On a candle, it's not clear. So you can do a 1 bar low. So you can say, hey, I want to go short on a 1 bar low. I wouldn't short this myself because I'm only expecting this to go here. But let's just say you did. Then what you do is, I'm going to go back to a line chart. Let it unfold. It's gone to the top one. So then let's just stick to a candlestick for a second. So you can see the next bar. Then you'll go here. Now the blue line and the red line are equal to each other on the stochastics RSI. Boom. There's the down bar. Let's just get really zoomed in. It hasn't gone below the last bar though. It's hard to see with all these lines. Let me just remove this line now. I'll go here. And boom! Look at that. Look at that. Didn't even know it was going to be that steep, right? So now we can project with high probability in advance. And that's what we're going to do next. Next, we're going to get right up to speed with today's date. Today's date. So obviously that was all backdated now. So I've just backdated the data. But now we're going to move up to today's date because the title of the video today was, is now the perfect time to buy Dogecoin. Well, it's going to be based on what I'm about to show you. So this low now, so now we can just delete this information. Look how beautiful this was though. Look, I want to emphasize this. Like, look, it tagged the extreme, which we said in advance. The time, it went to the extreme of the time. So if I just bring the, it doesn't let me do it that way. If I bring the time analysis back up of here, not here, of here to here. Look, it went right close to this 100%, right close to that, and boom, down. And that's what you'll find. So when you got price, pattern, momentum, and time telling you the same thing, the outcome is highly probable. So you would have made great profits on shorting this. I wouldn't have shorted it because now the big money's made in the big moves. So what we're looking at now, where we're going to wrap up this video today, is we've gone below this A. That confirms this B. Let's just get rid of this ABC, that's micro. Now we can get rid of all this data because it's no longer relevant. Because I was watching a few other crypto guys and I haven't seen anyone do Elliot wave like this. And you know, I used to just do it in Forex myself, and I guess I really took it for granted. And I think you really need to pay close attention to this, because it can give you valuable information. And let's just see how it plays out. So now let's just finish with this part here. Where is the market likely to go to? So let's just get to today's date. I think today's price is like right here, right here. This is where we're live now. We're live. We're no longer able to go back in time. Why? Because it's today's date. So now we are projecting in not knowing what's going to happen, but we're doing it exactly the same way. So first of all, let's just clean this up a little bit. So the chart is really clean. I'm going to leave this over here for a second. This is what we're looking at as a wave 2 of a wave 3. I'm going to just elaborate on this. Let me make it a little smaller. Why am I saying a wave 2 of a wave 3? What does that even mean? Okay. So the beauty of Elliot wave is it allows us to read the market on a macro picture, but also a micro picture. And that gives us context in the grand scheme of things. Because a lot of people get too narrowed in and not seeing the bigger picture. So if this is a wave 1, which it seems to be, it's the big move, we've got this nice correction, overlapping waves, all the way down to a wave 2. If I go back to our theory of what typically comes after a wave 1 and a wave 2 is a wave 3. But why I'm calling it a wave 2 of a wave 3 is that we've got this initial move up, wave 1 of a wave 3, and then this initial move down, a potential wave 2 of a wave 3. That's what I mean by this over here, a wave 2 of a wave 3. We can get rid of this as well. Right, so what we're going to look for next on a macro scale is a big move to the upside. And a typical wave 3 is longer than the former previous wave 1, more often than not. That's what we're looking at, right? So now let's just wrap up with zooming right the way back in over here. Let's put this as a wave 1. I'm actually going to change the color. Let's change the color to so we know it's a different count from the main wave count. Let's do the same here. And I'm taking my time here today because this is effectively a mini masterclass in itself. Is to say, look, you can read the markets like this. Yeah, it takes a bit of practice, but crypto's here to stay. So we want to be able to take profits at the optimum zone and buy in the optimum zones as well. So let's now wrap up with this part here. Right, let's just keep it nice and clean. I like to have my charts clean. Oh, and we're going to just zoom out like this. Right, this is my favorite. This is my favorite chart pattern. Yeah. And you might be thinking, what are you going on about, yeah? All I see is a bunch of random lines. This here. A, B, C of a B, and then a wave C. Love these. This is not guaranteed, but they're very high probability. When you see them like this, you're gonna pounce on, you know, I probably should trade this myself. Because often I'm covering coins that you're asking me to cover, but just because I'm covering them doesn't mean I'm trading them. Often I cover them just because you're trading them and you put them in the comments of, can you tell me what your thoughts are on Trias or CKB, on, you know, Nervous Network or Polkadot, on update on Ethereum or Bitcoin. So let's now look at this. So first things first, we're going to do a retracement, right? We're going to do a price retracement. What we're going to do is we're going to measure this low to this high, and the 3 points that we want is 50%, 62, and then 78.6. And you can already see is in that range. Second, today what we're going to do is an extension. Wave A and wave C, more often than not, have a direct relationship. And 100%, which is this red line here, is the most common. So straight away, if I had to pick which one's more likely, either can happen, you know, but I would say is likely to be here. But what happens with Fibonacci numbers and ratios is if the first one is exceeded, as in the price goes below, it just tends to go to the next one, right? So that's what we know. If it comfortably exceeds that, it will comfortably go to the next one. So now we've got two very clear price zones, right? Let's just move this down here just so we can really narrow this down. So we've got pattern and price, right? That is really powerful, really powerful. But now what we want to do is add in momentum, a momentum indicator. Now we can go onto the weekly. Let's just go to this top left. Just make sure it's on the right one. Yep. So the weekly is bearish, and over the next week, we'll probably see it go into the oversold zone. And we want to be aware of this when it gets into this zone and when it makes its next reversal. So when it gets into this zone, it tells us that it's likely to be close to the end of sideways to down, and we should expect a reversal. But to get it more accurate, we want to then jump into the daily chart, which is what we'll be playing on today. Pull up an indicator that marries up with these highs and lows, the bullish reversal in this zone, even though we've made a slightly lower low. And again, when I'm looking at highs and lows, I like to pull up two indicators with two settings. And now we're looking at the lows. All I do is I'm looking at these lows, right? And I'm just going, right, which one of these pegs the lows better? Which one of these is grabbing the lows better? Right, I'm just going to draw all of these, right? And again, I'm deliberately doing it like this. And then we can kind of make a conclusion on the same. So we're looking at these macro ones. So you can go, boom, this one got this low quite nicely, and so did this one, but it was also catching the in-betweens. This one and this one, you can see this one was better because it was more timely, whereas this one was a bit later, and then this one. So with that said, I would be aware of both, actually, both, because one is bullish and the other one is also, yeah, they're both bullish. They're both bullish. So both of them I like. And today we're going to stick with the bottom one because the major ones, it is picking them up. It's just that it's smoother. It seems to be a bit smoother. So we're going to stick with the 13. This part is a bit subjective. You got to kind of make a decision on what's going to give you the best information. So now we've got three things, right? We've got pattern, we've got price, and we've got momentum. And now we're going to finish on time. Time is a big one. Tell me if you know anyone that does time analysis. Time analysis. So the exact same way we do price, we can also do time. So what we do is we're going to measure how long it's taking for this 1, 2, 3, 4, 5 wave sequence to unfold. And a typical correction is a minimum of 50%, a typical maximum of 100%. You can see we've exceeded the 50%, so we can get rid of that. And we're close to this 100% level. And now to help us narrow that down, we can also measure how long it took to do this wave A. And more often than not, wave C and wave A are similar, very similar in time and price. So now we have this nice zone. Look how close this zone is. Look how narrow that zone is. And we have this zone down here as well. So the probability for Dogecoin is that this is looking like a highly probable wave C low, a wave C of a wave 2 of a wave 3. That's what that is. So the way you would write this in full is actually like this: a wave C of a wave 2 of a wave 3. That's what we're writing here. I'm actually now going to get rid of these, this one here and this one here. We can also get rid of this. See, it doesn't look like that's going to be the case. And I don't think we did an external retracement here. External retracements, you'll see, also really help us to see which one is it going to likely be in advance. And the external retracements are 1.6, and look at that, right into that range. So that also tells us it's likely to be this range. We've got this Fibonacci cluster zone. We can then also get rid of this. So that was a masterclass. Now, does it mean it's guaranteed that Dogecoin's low is going to be here? No, not at all, because we're not in the certainty game. We're not in the guarantee game. We're in a probability game. So what is a great buying strategy? Well, this swing high, should I say, if price exceeds it, that is the first confirmation that this low has been made. It's the first indication that the low has been made. A close above this swing high will be a further confirmation, and then a close below above this swing high will be the real confirmation that we're gonna need. But we don't want to necessarily wait until price reaches this zone or this zone. We can want to go, actually, we can buy on the next one bar high or the next swing low, because we've got a bullish reversal, we got price, we got time, we got momentum, pattern, everything's lining up, so it looks good to go. So now let's just project forward. So I'm using Dogecoin. Whether you love Dogecoin, hate Dogecoin, it's following price behavior. It's following buying and selling behavior, textbook style. Again, look at this: 1, 2, 3, 4, 5, A, B, C over 2. And now look at this: 1, 2, 3, 4, 5, A, B, C over 2. Look, 50 to 60, 70% of the time, these patterns will unfold as clean as this. You know, it's not, I mean, if you're not used to doing this and it takes a bit of practice, you might not see it. But when you see it, you go, oh, actually, this looks really, really great. So now let's just wrap up with the high probability wave 3 of wave 3. What's that likely to be? That's what we want to focus on. We don't need to focus on a macro wave 3. We want to now focus on, we can get rid of this now. We've got the value of that. We can keep this here because that hasn't really taken off yet, because obviously it's literally as of today. And what we're going to look at now, I can move this over here and this here. I'll get rid of this. I can also get rid of this, and I'll get rid of this as well. All right, now, what is the likely price action to follow with Dogecoin? So today's price is 23.7 cents. What is a typical wave 3? Well, typical wave 3 for any market, if I measure this low, so we measure wave 1, we project it forward from the wave 2 low, which hasn't been confirmed yet, and it's 1.618 to 2.618. And then we can help confirm that with an external retracement. And the two key numbers for a wave 3 are 1.618 and 2.618. So you can see that is likely going to be here. So now we can adjust this over here, take this one out and go bump. How long does a wave 3 normally take? A wave 3 typically takes the same time as a minimum as wave 1. And a typical maximum is the same time it's taken to do a wave 1 to a wave 2. So now we've got this next price zone over here. What is that? Well, let's have a look. It's 50 cents, roughly 50, 52 cents. So it's around a 2x from where it is today. And that is the next price zone. Will it reach the next one above? Well, if it exceeds it, I wouldn't be overly surprised if it kind of gets there and then does like a bump, move up to the next one. But this is the high probability minimum zone. And we should see that coincide with the weekly momentum getting overbought. So it's maybe take a few weeks. And then on the next bearish reversal, it'll probably coincide with the wave 3 of 3 high. So let me just give you these dates. It's the 10th of October until the 9th of November. There you have it. So there you have it. We did an A to Z, pretty much a bang-on masterclass on how to read the markets like a book. Take my Elliot Wave free masterclass. At the end, I actually give my courses. Yeah, you have to buy them, but I'm doing like a 90% discount at the moment. I'll show you them. We've done Elliot Wave Fibonacci and Advanced Fibonacci. You can get all of them. I've also added this bonus of how to 10x your money. There's a particular strategy that I'm teaching a lot of my students at the moment on how to 10x your money, which is away from using Elliot Wave and Fibonacci, a bit more predictable, easier to do, but I cover it in full detail, A to Z. But Elliot Wave, what I cover, if I just have a quick look, I just cover the basics. It's like 3 to 5 minute bite-sized chunks, and I cover it in detail, step by step, step by step. So you can really understand the foundation, how to read the markets, how the rules apply, what are the Elliot Wave rules, which other people have proven over decades and decades, and I've been doing for over a decade myself, like 15 years. Then Fibonacci, we cover everything in just bite-sized chunks. What is Fibonacci, the foundation, the retracements, external retracements. I cover the bonuses. I got a few bonuses in here, and then I just do a lot of live examples of doing how we did it today. So you can really exercise this muscle and hopefully do it yourself. And then the advanced one, the advanced course is pretty punchy, but it's really about the extensions, how to, measure a wave and see what the next wave is likely to be and the relationship between the two. And I just cover it step by step. I really like these courses. Students are finding them great, but I just want to make sure you know that they're available. But in the masterclass, I cover it quite fast, but I cover pretty much everything. But then if you want to do it more slow and steady in bite-sized chunks, then you have the course. So there you have it. If you like today's content, like, subscribe, hit the bell notification. Dogecoin is now the right time to buy. Look, it depends if it fits into your strategy, right? Because there's so many different types of strategies, but this is likely to occur like this. If it does, we should expect then a pullback and then the next wave coming afterwards. But I think it's going to be a lot more aggressive. Like looking at how aggressive this move was, it's probably gonna really overextend. Looking at it, just reminding ourselves. And then the wave, the fifth wave is probably going to be the longest. More often than not, most markets, wave 3 is the longest. But here, we'll probably see something like this. I might as well show you this. I might as well show you one last thing. Let's just do it whilst we're here. Wave 3 on a macro picture, we can expect 1.618, which is around $1.30. So, and what we're looking at here, just so we're ultra clear, is this part. This wave 3, but broken down to 5-way sequence, 1, 2, 3, 4, 5. So there you have it. That was the masterclass in itself on Dogecoin. Read the markets like a pro. Elliot Wave Fibonacci is beautiful once you understand how. But you got to exercise that muscle to really get to grips with everything. So like, subscribe, hit the bell notification. Take my free Elliot Wave Fibonacci masterclass. Hopefully you'll get more and more value so you can really digest this content, because you're telling me that wow, a lot of the time our analysis is on point, but it's not about being right or wrong, because we're not in the certainty game, we're in the probability game. And using price, time, pattern, momentum, we can get the probability and the edge in our favor, so we can act with consistency, with objectivity, non-emotion, mechanical behavior, and that's how you win in this game. Let's finish with a quote. I'm going to grab a particular one actually. I think it's in this book. It was a Bruce Lee quote. Yeah, because I've been experiencing this, because I've been teaching people, and sometimes I do one-to-ones, group sessions, then it's just courses like this, like me doing videos like this. But this one I like this. You know, nothing personal against anyone, but it's very, very true. A wise man can learn more from a foolish question than a fool can learn from a wise answer. Bruce Lee. Now, why do I say this one? Well, questions tell me where a person is in their thinking. So, and it's difficult, I find it difficult sometimes to coach when the level is not there. So I might want to coach at this level, but the person is not able to hear at this level because they're only at this level. And to hear at this level, you have to do the basics. So one of the reasons I was motivated to put together my free Elliot Wave Fibonacci Masterclass is so you can up your level. So when you see my content, you can hear the actual information that I'm giving. Whereas if your level is quite low, because you're just, everything is difficult before it's easy. So it means it's difficult to look at these charts and for it to make sense, because it doesn't make sense naturally. But with training, it makes a lot of sense. So a wise man can learn more from a foolish question than a fool can from a wise answer. Because I can give away a lot of content and a lot of information, but I found a lot of the time the person that I'm giving it to cannot hear it the way I'm trying to deliver it. So today I broke things down in layman's terms, like really, really step by step, slow and steady, because I think it's really, really important. I think we're reaching a point in Bitcoin. In fact, let's finish on Bitcoin. I think I did a video on Bitcoin yesterday. This is Bitcoin. Why am I being very... I just got a real strong feeling based on what I just taught you, based on exactly what I just taught you, that Bitcoin, let's just look at the macro picture. I don't know how long I've been filming for now. Normally I try and keep my videos short and sweet, but look, we just need to get this content out so you can be prepared. On a macro picture, again, using Elliot Wave Fibonacci, I believe Bitcoin is, I'm going to just pull it up on this. I'm going to do it like this. It's so important because not many people are going to be able to tell you this in advance, only in hindsight. It doesn't mean it's going to happen like this, but I truly believe that it's likely, there's a high probability that Bitcoin is here. It's done this initial move down, it's got this correction here, and then we expect this final leg down, this leg down here, and this wave C, and to complete the wave 4 low. But then I also think it's important to identify if that is the case, if that is how it unfolds, that we're probably going to end up finishing the year and maybe into early next year, this final part of the bull market, which is going to be explosive. It will probably be much even bigger than this movement here because of panic buying, FOMO, fear of missing out. People are going to panic buy. Institutions are going to come in stronger, and there's going to be all types of things happening, and the market's going to go parabolic, and it's going to be insane. I think it's going to be mania for 3 to 6 months. 3 to 6 months. It's going to be just like the mania in 2017, mid 2017, but the last 2 to 6 weeks in 2017 went from like this to like this, like literally off the charts. But then there was a big correction, and then we want to anticipate this. We want to anticipate the short-term correction, so you can take profits, prepare yourselves, and buy at the dip where there's going to be lots of opportunity, and then ride this wave 3 to 6 months, but be prepared to take profits, because most people, I'm afraid to say, are going to lose, because crypto, all markets, financial markets, forex markets, commodity markets is a zero-sum game, which means there's winners and losers. For some people to win, others have to lose. For some people to make great profits, others have to make a loss, because there's a transfer. That's how the markets work when you're buying and selling. When you're just buying and selling Bitcoin, when you're buying and selling Ethereum, when you're buying and selling Dogecoin, that's the way the markets work. Your job is to have the edge in your favor and be on the winning side. Yeah, but it takes training. That's why I'm kind of laboring this point, because often it doesn't get across. I've done the training, like I've given you the training, the free, I'm doing it now. So, hopefully you got the training here, but the free Elliot Wave Fibonacci goes a bit deeper, and then my courses go deeper again. So and it's your job, and only you can take full responsibility to be ahead of the game, sharpen your axe, and make your decisions, because you have to make the decisions. So what I believe is going to happen with Bitcoin is, this looks like to me, this wave A, this wave B, and it looks like a wave C should be forming for, that's my opinion of the market. Could be absolutely wrong, and I'm okay with that. But if I zoom out, this is what I'm seeing on a macro scale picture, right? Macro scale, where we had this 2017 incredible bull run. This is 2017. We had this complex correction, right? It looks like a nice ABC, but it just carried on for ages and it was really overextended. And then we had this beautiful movement to the upside. Then we had COVID, we had let's just keep it broad. Let's keep it, with this one. Oh, let me just make sure I got this. We had this wave 1, wave 2, what looks like a wave 3, 4, 5 over 3. And we called this top. If you look at my April 19 video, we called this top. This wave here, this wave 3. And now it looks like we're forming this wave 4. Now there's this principle of alternation. And what principle of alternation shows is when wave 2 is complex, wave 4 is often simple. Shorter, less in time. So we can see that this correction, it took ages to finish, right? This correction over here should be less in time than the previous wave 2. Now this is on a real macro picture. Most people don't look at this level of the picture, because you can't see. Most people are like so zoomed in on just this year or the last few weeks and the last few months. But if this is the case, let me keep it like this, then we're probably going to retest this bottom, which I absolutely don't want. Like if I had it my way, but I'm prepared for it. This, might be something like a double bottom. And then, if I can get rid of this arrow, then I think we're going to have the most extraordinary, incredible bull run of all bull runs. So this is Bitcoin, and I use Bitcoin like a moving average. It's like an indicator to determine what's likely to happen with the rest of the markets. Now, wave 5 and wave 1 are often equal to each other, but in crypto land, in commodities and Bitcoin and crypto, wave 5 tends to be the extended wave. What does that mean? Well, it means it tends to be bigger than wave 3. So if it's bigger than wave 3, if we measure wave 3, right, if we actually measure wave 3, which is almost equal to the previous wave, we should expect it to be at least equal to wave 3, but I reckon it'll probably be 1.618 of wave 3. That would mean Bitcoin will get to between 90 to 127,000. Now, as the market unfolds, we'll get a clearer picture, but I think it's just going to go parabolic. Like if we just zoom in, I'm taking my time with this video. I'm not in a rush today because I think it's so important. I'm frightened of what's going to happen in the next few weeks, and it's going to burn a lot of people. But this was 2017. Like look at this, right? 2017. If we just zoom right the way into 2017, right? Let me go here. 2017, right? When we see these kind of moves, right? It looked like the market, this is the typical top, right? But what tends to happen in the last few weeks, we get into September, we got into October, and we broke this high, and then it just went crazy. It went real crazy. Like it's crazy. Overbuying, panic buying. This part here was total panic buying. And it only lasted for how long? From around 6 weeks of mania. Like crazy. The price of Bitcoin went from $5,000-$6,000 to $20,000. That's unsustainable. It is panic buying, mania. But a lot of people got rich. But also, what also happened, and this is where you don't want to fall in for this trap, you have to be on the other side of the game, is that most people, like retail investors, are hearing it in the news. Bitcoin's going parabolic. People are making millions. And people are getting in here. People are getting in here. And I know people personally, And the very unlucky few that literally got in at the top where we're feeling like it's never going to calm down. And then what happened? Boom, the big correction, right? Like almost overnight. Like look at that. It went from 20,000 down to 13,000. It's like 30, 40, 50% nearly in a matter of what was it? December 16th to December 20, 5 days. 5 days. And then there was a little move up, and then people thought the market was going to continue on the upside, and then bang, look at that, just tanked, just horrible, right? And you got to be mindful that that's likely to happen again. But where are we right now? I think we're kind of at this phase, believe it or not, of Bitcoin. Yeah, and I think we're going to break this all-time new high, and we're going to hit traditional Fibonacci numbers and all the rest. But then you got to realize it's Bitcoin. We're living in the information age where news travels so fast. It's going to go parabolic. That's my prediction. It's going to, this is the typical projections, but then there's going to be 2-3 weeks of mania, and you need to be ready. That's why I'm done. That's why I put my Fibonacci and Elliot Wave Masterclass together. So when it comes to these phases, when I did my video on Dogecoin, how we started, and we saw this mania buying, it was very similar to what we're looking at in 2017, this mania buying. It's like a correction is inevitable. So let's wrap up with, again, let's just zoom back out with this picture, because I don't think many people are covering it like this. And I want you to have the edge. Let's bring it all back in. Let's summarize. Look at this snapshot, right? Because most people think you can't buy the bottoms and sell the tops. You can, you absolutely can. But it takes training. It's not easy. So let's just finish up on the masterclass. So learn this stuff. I cover it in the masterclass. This Elliot Wave, the premise, the foundation, combined with Fibonacci. Get to grips with, we're likely going to see this correction. Not guaranteed, but we're likely, because the weekly momentum is also bearish on Bitcoin. Like if we look in the top left, is bearish. So 2, 3, 4 weeks of down, sideways to down. Everything's lining up. You've got to be aware of this. And then you want to be prepped for this. So, it might negate what I said with Dogecoin today. Is now the right time to buy? Well, what I think is going to happen is this. All right, this is and we'll just see. It's not about being right or wrong, but we're just going with hard facts, objective opinions, and all the rest. Is the whole market is very sensitive to Bitcoin. Very sensitive to Bitcoin. So if I just zoom in here, I believe we're going to get this movement to the upside, get close to this top, retest, and this phase is actually going to probably give the market a lot of optimism. And everyone's going to think, wow, we're back on, the game's back on. And that's where Dogecoin will likely do a nice move to the upside. Really nice move to the upside, along with a lot of other cryptos. But then if this then occurs, boom, then that's going to panic the markets. And that's what we need to be prepared for. So there you have it. I know today was a long video, but I just needed to get it out to go, look, get it on the record. Hopefully you'll see this and you'll take the time to digest this, to go, okay, I need to take full responsibility of my portfolio. And if Bitcoin gets to here and it does unfold this way, and this part does happen, it's going to be severe for the whole market, because it's likely to retest this bottom to finish off away for a correction. And then you want to have lots of USDT, Tether, USDC, whatever stable coins you use to pounce on the markets. Things that, again, that are going to be 50, 60, 70, 90% down from where they are today. You can get some real bargain prices, especially if the last leg of the market unfolds as anticipated. Then, oh my Lord, it can be life-changing for you, life-changing. So if you like today's video, like, subscribe, hit the bell notification, and let me know, because today we covered a lot. What was your favorite thing from today's content? See you soon.